Hello everyone, welcome to Plovdiv, which is a city in sort of the center of Bulgaria. It is kind of a student town, and I am here in the sort of downtown city center area by a nice park. We'll see if we can go take a little walk. There's a cool little, I don't know if you see it, hill over here, right there. And yeah, so very nice area. I was just visiting probably my favorite restaurant in Bulgaria, which is called Tam's House. They have some great food. The other place I guess that I've been that I would say stands out to me is Vilachinka. If you ever get a chance, they tend to have some quite nice food there as well. Anyway, Tam's House, excellent stuff. Highly underrated. Definitely would recommend it. They have the best carrot cake that I have ever had. It is really excellent. So yeah, definitely check it out and come and visit Plovdiv at some sort of point in time. Anyway, some people were asking about my portfolio, and I figured I would talk a little bit about what I see in the market at the moment, some of the things that I'm doing. Now, I want to start by saying, absolutely please do not buy anything because I'm buying it. Do not make investment decisions because I say anything. I just think everybody should research for themselves, understand for themselves what it is that is going to fit with their goals. Everybody's goals are different. Everybody's theses are different. I could be entirely wrong. I could totally blow it and make huge mistakes. However, since people were asking, I will share a few things, which I do think are relevant, just very timely, so I wanted to film this video now rather than at some other point in time because of just some of the things that are going on. And so be aware in advance, all of this, my perspective, my approach, is it's very risky. So we'll talk a little bit about the details. Before we do though, if you are new here, welcome. I'm Michael from Offshore Citizen, and please hit the subscribe button, hit the all notification bell, get updated on all of our future videos. And if you'd like help with custom international solutions for you or your business, relocating abroad, places to get residency, help getting residencies, citizenships, tax optimization, all these sorts of things. Oh, there's a very cool little bubble thing over here. Very cool. Anyway, please reach out to us. You can book a call, calendly.com/Michael-Rosmer, link in the description below, or send a message to our websites, offshorecitizen.net and offshorecapitalist.com. Okay, so just for some context, obviously markets are down in a lot of areas. Clearly, there's a few sectors that have done pretty well, but very few, right? Mostly, almost everything is down a lot. And this includes bonds, this includes various different types of stocks. This includes all kinds of different things, with maybe the exception of energy, fertilizers, kind of some things like that. Generally, things are down. The US dollar is doing very well though, so that is quite nice. Maybe we'll go find some place to sit here so we're not interrupting people. I feel somewhat self-conscious sometimes filming these things in walking around and stuff like this, but oh well, we'll deal with it. Anyway. The whole point is globally, everything's down. Not everything down, so most things are down. And so the question is this a good buying opportunity, or is this an opportunity for things to go down a lot further? And so I started dollar cost averaging into a selection of kind of hand-picked stocks about a month and a half ago, I guess, something like that. I basically just buy every day. So the same amount every day, same names every day. I will readjust depending on what it is that I think things are going to do, up and down, etc. But, and maybe add some names, maybe remove some names, etc. But broadly, that is the main thing I've been doing. I did deploy a whole bunch of capital yesterday, I guess it was, in some other things on a kind of shorter term position. And, that's based on sort of the shorter term environment. Now, I am buying exclusively small or mid-cap tech, okay? Now, why am I doing this? Well, a few different things here. First of all, I tend to look at it and I think the S&P 500 isn't down that much, around 20% or so. NASDAQ is down around 30%. things I'm buying are like down 80 and 90%. I'll go through specific names, not in this video, but in another one, because I want to do them like one by one to explain kind of the thesis, etc. But anyway, so I kind of figure it's important to keep this in mind because, well, what are the chances that funds are going to flow from some of these other things in the future? I tend to think where we're getting to now is that bonds are starting to get attractive returns, meaning that the bond market has crashed like crazy this year and yields are obviously going up. There's a lot of people in cash. I was calling some of our private bankers and asking them, like, what are your clients investing in? Not because I want to invest in the same thing. I mostly don't think that a lot of people necessarily know what they're doing, but to understand the sentiment. And what did they tell me? They said people are in cash, they're selling tech, out of tech, in healthcare and energy. And so I look at that and say, okay, well, everywhere that I look, I'm hearing people say, hey, it's really hard to get people to buy. Cash is king. Cash is the best position right now. Well, you know, contrary to this, back last, like end of 2021, everybody was saying, oh, cash is trash. You should not be in cash because inflation, blah, blah, blah. And that was the best time to go to cash, right? So I'm kind of wondering whether now is starting to, maybe we're a little bit early, hard to say, starting to become the point where actually being out of cash is a better move. And I think that in general what you're going to see is that as bond yields start to improve quite a bit, people are going to start saying, well, if I'm sitting in cash anyway, I would rather be earning 4% interest than nothing, even though, yeah, maybe rates will rise, that could have some downward pressure, maybe inflation is higher than this, that's fine, better this than nothing. And I expect that that will mean there's probably a fairly good bond trade coming up where you can buy bonds and not just get the coupon, but you can also get some upside appreciation if it's a long-term bond. So in other words, if they decide to cut rates on the other side of things, then the bond prices will go up. If things become more optimal for people who are in, like as people start piling more money in, etc., that'll push bond prices up. And so I think realistically, there may be a reasonable trade there. And if I'm sitting on, a lot of cash, I'm thinking we're probably getting close to that point. Is it right now? Is it, slightly later than now? Very, very difficult to say in terms of timing. But somewhere in and around this or the next few months, probably there's a reasonable trade there. Now, the next thing is the Aaii survey just came out. And well, it comes out every week or every 2 weeks, whatever it is. It is the most bearish it has been since March 2009. Now keep in mind, March 2009 was the bottom of the market, okay? So literally, I think it was 2 weeks before the market actually totally bottomed, the sentiment indicator for Aaii was the lowest it's ever been. And so this is an indicator that measures what's people's sentiment about whether they think prices will be higher in the next 6 to 12 months. So I look at this, and that's a contrarian indicator. Now, it's just one indicator. Does it mean that things are going to go up? No. Historically, the reliability of that as being something that in the next 6 to 12 months, you get some degree of positive performance has been pretty high. And part of the reason I think about this is, again, as I'm talking to all these people, I'm talking to various different bankers around the world, I'm talking to friends, I'm talking to all kinds of things, and they're all heavy cash. So I'm like, well, where are the sellers? Who's going to be selling? What is, in order to drive prices down, you need more sellers than you need buyers. And clearly there's not the buyers, but there hasn't been the buyers for a while. So we know that. The question is, where are the sellers going to come from? And I just don't buy that based on the sentiment and based on all these people that I'm talking to, etc., that you're going to see a lot of selling action, particularly in things like this small cap tech that I'm talking about, that I'm buying, right? And the reason for this is, will bond yields being higher push down valuations and probably cause funds to flow into bonds? Yes, I think they will. And just partly that'll be cash on the sidelines will go into bonds. But I think partially the cash will also flow to stuff like the S&P 500. But just ask yourself, if you're looking at buying, I don't know, pick some random small cap, let's say you're going to buy Teladoc. You can say, I'm going to buy Teladoc or I'm going to buy bonds. Who does that? You know, like, these are very different decisions, because bonds are something you buy for safety. Teladoc is something you buy for growth. Teladoc is super small and super sold down. Bonds are kind of a flight to safety. What else is a flight to safety? Microsoft, ExxonMobil, Coca-Cola, Nike, etc. So I expect that if funds start to flow out of things, it'll flow out of the S&P 500, which hasn't seen as much of a correction. And so we may see more downside in the S&P. I mean, we could see more downside in anything, right? Like, there's definitely a possibility of a lag down that could be, you know, quite bad. But for me, I think that there's a reasonable chance that a lot of the downside is already out of these small cap tech companies. And, you know, a lot of these are growing at 40% a year or something. So when I look at the valuations are pretty attractive. And I think over a 10-year time horizon, if I'm not concerned about, like, I'm not thinking, okay, I'm going to get a rate return in 6 months. Maybe negative is in 6 months, okay? But my time horizon for this is 5 to 20 years. And if I'm buying companies that I think are solid companies at prices that are really hard to get, I mean, I'm not buying this one, but I think it's worth considering, is Nvidia, okay? Nvidia is down 66% approximately, 2/3 from the highs. Nvidia is a phenomenal company, like ridiculously phenomenal company that is doing things that nobody is really going to be able to replicate. If you go and check out, for example, their Omniverse project, unbelievable. You know, it's not the type of thing that you can easily compete with. They're doing really cool things in self-driving. They are doing all kinds of stuff. Like, it's really, really crazy. And it's down a lot. Is it at a point where you'd want to buy? Hard to say. If it goes down a bit more, I would probably consider buying. But I think it's probably a good price, and probably a price that it hasn't been at in quite a while, comparative to the underlying value. So I just think we're in a situation where there's a lot of that going on at the moment. And if you're willing to go, and there's kind of that expression, right? Be greedy when others are fearful, and fearful when others are greedy. Like, you know, there's a lot of fear out there. Yeah, let's talk about that fear, because I think this is a big thing. So what's the risk? Inflation is stickier than you might believe. I don't know if I really buy that, barring a black swan. I kind of look at the components of inflation, and I think that, generally speaking, we're going to probably get a couple more interest rate hikes. Could be wrong. I mean, that's what it looks like. That's what they basically have said. The other day they basically said, as I recall, 75, 50, 25, so 1.5% higher. Okay, great. We kind of can expect we're going to have around 4.5% interest rates. We'll see how long they last there for. Yeah, there's QT. Okay, great. That's that. There's war in Russia. Frankly, you know, they just did a mobilization. Could they amp up? Could they use, like, tactical nukes or something? Yeah, they could. That would be a really bad situation. I mentioned quite a while ago, I think it's really imperative that we as a society try and avoid this. This is not a good thing. But it traditionally has not been very smart to bet on the worst case scenario. If you look, the people who have done best have been optimistic. And it doesn't mean you should be delusional. I think that's insane. But optimistic, because ultimately things tend to go up more than they tend to go down. Ultimately, if things go really, really bad, you're probably screwed anyway. So, you know, that's something that, you know, it just doesn't pay, right? You can never save your way to extreme wealth, sort of thing. And so usually people end up missing the opportunities. Not to say that this is necessarily an opportunity or it isn't. I obviously am buying, right? So, you know, I clearly think that the risk to reward is pretty good if I have a long-term time horizon. To me, the biggest risk on the horizon, aside from I've mentioned before that we could have a lost decade, I think this is a very reasonable possibility. The biggest risk is a sovereign currency crisis. So the DXY is going up. I did a video the other day on the dollar milkshake theory. You know, I think very reasonable. It could hit 120. It's at about 113 right now. It could go beyond that. This could cause a lot of problems for a lot of things. And so I do think that is a risk that is very unclear how consequential it would be, but potentially pretty big. You could have a significant recession, on probably the later half of 2023 in the US and probably earlier in other places. But who knows? It might not be a big recession, might be a small recession. Who knows? My baseline thesis would be that things never tend to be as bad as it could be, right? The worst case scenario doesn't happen because of the fact that people are innovative, people are they have a lot of incentive not to make it happen that way. And so I would expect that if things start to get bad, then they will start to do things to try and stimulate and correct. I suspect there's something called the Plaza Accords that happened in, I think it was 1985, 1987, something like that, that was helping to prevent the US dollar from becoming overinflated. I could totally see a new Plaza Accord happening if the US dollar gets too out of control. And so there's a lot of different things that can take place. And so I personally am not fully investing. I'm not like throwing all my capital in. I have lots of cash on the sidelines. If you do see another leg down, I am perfectly prepared to buy at bigger discounts. But in general, this is what I'm buying. Now, what else am I buying? I'm looking a lot at real estate in markets that are high yield, that haven't gone up too much. Bali, for example, you can get really good yields on property in doing Airbnb. Now, prices have gone up quite a bit over the last little bit. The market is quite hot. So if you were buying a few months ago, certainly it was a less competitive market. Right now, you need to be very much on top of it, like place an offer the day you see it sort of thing, be prepared to close quickly, etc. And there are a lot of places that are building new inventory. So I'm not really sure how exactly that's going to play out. A client and friend was just there kind of scoping some things out and giving some on-the-ground details of kind of the latest numbers, etc. And so you can kind of play with it. This is mostly leasehold, not freehold property. But for me, the idea is buy with like a 5-year window. So basically you're buying, trying to get high yield for 5 years. You are then planning on flipping, hopefully at some sort of a profit. You have typically a 30-year lease, which is usually extendable for, say, another 30 years. At what rate is kind of another question. And so I think that's interesting. I'm looking a lot at where are places in the world that the currency is beaten down and things are priced locally. So basically the idea being, if the dollar is high, and I'm holding mostly dollars from a currency perspective, then where are the places that I can take advantage of that arbitrage? Like I said, I do think the dollar probably will continue to rise for a while. We'll see. I could be totally wrong, right? But I'm looking for buying opportunities on that basis. I don't particularly like investing in a lot of the emerging markets right now, just because I think they will be hurt generally by a weak dollar. However, if I can buy really long-term quality assets, mainly real estate in this particular case, I was looking at some properties today and it's like, there's maybe some really good deals there. So yeah, checking that out. One of the places that I'm looking at quite a bit is Malaysia. I've been mentioning this for a while. The rental yields are not good in Malaysia. However, for myself, for looking at a property that I would like long-term, I kind of feel like if I don't buy sometime around now, I'll probably regret it in 20 years. So it's kind of thinking that very long-term approach. Some other things, I'm looking at a deal right now that's quite attractive, which is a private loan. I've mentioned this before. We'll do secured private loans on real estate. And so I'm looking at that. This is in Canada, particularly. Somebody was sending me some things from the US for basically buying properties that are down and kind of doing something with them. I'm not really so interested in that right now because I'm concerned the US real estate market's probably going to take about a 20%-ish haircut. We'll see. And so that's not so exciting for me. Those are basically what I'm principally doing right now. I obviously have some crypto. I obviously have my own companies, etc. So anyway, tell me what you guys are investing in. Put it in the comments below. Tell me what I don't see. And I will look forward to seeing you on the next video.